What's up, everyone? Excited to give this video today about GameStop, which is coming down to its 200-day moving average, which I believe it will hold and likely move higher. So that's my personal opinion, obviously not financial advice, but let's dive into the video. So what I'll be doing today is I'll be going over the chart, giving a price prediction for shares. I'll jump into some short interest numbers I'm seeing for the stock as well, and then I'll dive into the financials of the company. That being said, let's jump right into the chart. So we can see this 200-day moving average has acted as support in the past. In fact, this daily moving average acted as support just on July 10th here. And we came down to test it once again on July 18th, held and moved higher. Now that we're coming down to test this daily moving average once again, I believe we hold it and likely move higher over the coming weeks. So I think a good reason for why this daily moving average will hold is not just the fact that it's the 200-day moving average, which is the most firm and widely watched daily moving average. It's the fact that the 50-day moving average crossed above the 200-day moving average on July 3rd. And for those that don't know, that is called a golden cross, which basically is just a signal of bullish momentum. So I think this moving average likely holds on the backs of bullish momentum. So that is my prediction for shares. I think we likely move up to resistance at about 27 bucks, which is where shares had topped out in June on the 13th. It's also where shares had topped out in March on the 22nd, and it's where we saw some consolidation last year in the fall. So this seems like a significant level of consolidation for GameStop. Not saying that shares must, top out at this level, but it's just pretty likely given that's where we saw some selling pressure in the past. So maybe GameStop is able to burst through this level and will continue higher. Obviously, time will tell, but a quick and high probability move, in my opinion, is that we bounce off this 200-day moving average like we have over the past 2 weeks, and we see a move up to some short-term resistance at $27. So that is my short-term price prediction for GameStop. With that being said, let's take a peek at some of the seasonality trends for the stock. So this screen here shows me which months the stock typically does good in, which months the stock typically does poorly in. So we can see here in July, shares are typically down about 0.5%, but in August, shares are up 6% on average. So in August, this August month is actually the second most bullish month for the stock, which is definitely a good sign for shares. So love to see that there. And then September and October are the third and the fourth best month for the stock. So definitely seeing this bullish technical setup line up with a good seasonality trend for the stock. So August, September, October, these are three very bullish months for GameStop. So I definitely do like to see that coinciding with those bullish technicals. With that being said, though, let's take a look at the short interest for the stock. So we can see that days to cover is at 13.8, and the number's not pulling in, but short as a percent of float is about 20%. So 20% of the float is sold short. So, not the highest number there. But when we take a look at days to cover, so days to cover of 13.8 tells me that it would take 13.8 days of average volume to cover the shares that are sold short. So that's definitely a pretty high days to cover number. When we're looking for a short squeeze, we typically look for a short squeeze anytime this number is above 10. So to see it at 13.8 definitely signifies a strong likelihood of a short squeeze for GameStop. So awesome to see there. I would give GameStop, an A to a A plus in terms of a short squeeze likelihood. And I don't hand those out lightly at all. I would never give an A, and if we didn't see days to cover over 10, and given days to cover is almost 14 for this stock, I definitely think it's a high likelihood that we see shares kind of squeeze higher. And then obviously we've been rising kind of in sympathy with what's going on with AMC right now. Obviously AMC, we saw that block of that ape conversion, so that never took place. So that's definitely a good sign for AMC shares. Almost seeing GameStop, kind of rise in sympathy with AMC. But with that being said, let's take a look at some of the fundamentals of the company to kind of see how the company stacks up relative to peers and relative to its own 5-year averages. So obviously the company isn't PE profitable right now. It doesn't have price to earnings. It doesn't have earnings per share at this current time. And then when we take a look at EV to sales, so we see EV to sales at 1 times, which is actually above the sector median and basically in line with, or excuse me, it is above the 5-year average and basically in line with the sector median. So I don't have many numbers to go off of here in terms of valuation, just because the company isn't profitable right now. So I'll just kind of keep it moving here. But EV to sales numbers are basically in line with the company's history. And then, so this is a bit concerning here. So revenue growth is minus 5% for the past year, which is well below the sector median at 9%, but is in line with GameStop's 5-year average of declining revenues. So don't love to see revenues declining, but it is slightly better than that 5-year average. And then for the next 12 months, we're projecting revenue to drop 2.7%, which is a stark contrast from the sector median of 6.7%. So, once again, seeing this number be well below that sector median, which obviously isn't a good sign. Anytime you have a company that isn't making money, you always want to see growth metrics kind of rationalize that valuation. We're just not seeing that here with GameStop at this current time. And I'm continuing to say that because I know a lot of people are going to be like tearing me apart, for kind of questioning GameStop here. But at the end of the day, I don't make videos to appease people. I make videos, based in reality, and the reality is that GameStop is, slowing their growth significantly, and the company doesn't make any money. So sorry, but that's just reality. And then when we take a look at gross profit margin, we can see that gross profit margin is at 23%, which is below the sector median and basically in line with GameStop's 5-year average. So not a horrible number here. For those that don't know, this basically just tells you what the company makes on every single thing that they sell. So they're making money on the items that they sell. This is just revenue minus cost of goods sold here. So they're able to make money on what they're selling. They really just need to see growth kind of pick up. To obviously sell more volume and then make money. So the company still has a ways to go in terms of growth, but it's good to see that the profitability is there. Now it's just really a matter of getting that growth to push the company towards EPS positive. And then when we take a look at cash per share, we see that the company has $3.47 of cash per share. And if I were to kind of see what that is based on today's price action, well, that means 15% of the market cap, 15% of the company is in cash, which definitely provides a decent floor for the company and signals to investors that the company does have some cash on hand to help fund its future operations. But speaking of cash on hand, let's take a look at the company's balance sheet and see if the company does have enough money to kind of continue to run operations. And we see that the company has $1.3 billion in cash and only $650 million in debt. So they have $650 million more of cash than they do debt. So that's an awesome situation to be in. This definitely gives me confidence that the company will be able to fund its future operations without having to, issue shares and dilute shareholders, which obviously is always negatively received by investors. So really good sign to see that the company has enough cash to fund its future operations. And this is in line with a couple peers as well. Really do love to see GameStop's balance sheet, kind of look as healthy as it does. And then we could see here that GameStop is, has a higher short interest than all the peers, all the close peers. And this screen just shows me, all of the close peer companies, and I'm going to compare GameStop to these close peers. So you can see that trading-wise, GameStop is basically, middle of the line, middle of the pack in terms of trading performance over the past 12 months. And then when we take a look at valuation, the company has a PE that's obviously not positive. And then for the next year, we're expecting a PE of negative 88, which is well below the sector, the close peers here. So this tells me that GameStop is definitely trading at a premium relative to its peers. And we can see EV to sales, which is a number we do have for the company, at 1, which is well above the peers as well. So basically, at any valuation metric you look at, the company is trading significantly above the close peers, and just to note, and significantly above that sector median. And then when we take a look at revenue growth, we're actually pretty in line with the close peers, although we have one outperformer here. Down 5% for the year is basically in line with all the peers, and in fact, it's actually the second best number in terms of growth relative to the peers. So you wouldn't expect that, but it seems as if the general peer, the close peers are, really struggling in terms of growth. And then let's keep it moving here for profitability. We can see that the company has a 23% profitability, gross profit margin, and that is basically in line with most peers. We see EM and UPBD outperforming that gross profit margin number. And then we see net income margin at minus 3.5%, which is basically in line with the peers once again here. See peers with worse numbers here. I see 2 minus 20%. So definitely not a good number for GameStop, but when you compare it to the peers, once again, it does rank out pretty decent. And then, like I said, short interest pretty high, and that balance sheet looks very solid for GameStop. So you add it all up, valuation is definitely expensive relative to the sector, relative to the close peers, but growth and profitability are pretty solid when you compare it to the close peers. So overall, it does seem like GameStop is trading at a high valuation. Yes, it's expensive, but that growth, those growth numbers and those profitability numbers, could improve, but they're not too shabby when you compare it to the general peers. Excuse me, to the close peers. So, in summary, the stock has a days to cover, which is implying a high likelihood of short squeeze here, and we also are coming down to test this 200-day moving average. I believe we likely see this 200-day moving average hold, and we get a move higher to about $27 over the coming days to weeks here for GameStop. So that is my official prediction for GameStop. If you like the video, please leave a like and subscribe. With that being said, have a good one, everyone. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.